Hello, everyone, and welcome back to the GMS Weekly Podcast, where we break down the key developments shaping the global ship recycling markets. I'm Ingrid.
And I'm Henning. It's week 11 of 2026, and if there's one word that sums up the global backdrop right now, it's probably uncertainty.
That's putting it mildly. Geopolitics has once again taken center stage this week, and the ripple effects are being felt across energy markets, global shipping routes, and of course, the ship recycling sector.
Exactly. The biggest story dominating headlines this week revolves around escalating tensions in the Middle East. A series of military strikes targeting Iran's Kharg Island, one of the country's main oil export terminals, has sent shockwaves through the global energy market.
And that's significant because Kharg Island is responsible for a huge portion of Iran's crude exports. It's capable of handling several large tankers at once, so any disruption there immediately raises concerns about global supply.
Which is why oil markets reacted so quickly. Prices climbed again this week, with crude pushing close to the US $100 per barrel mark.
Whenever oil starts approaching those kinds of levels, it has a cascading effect across the entire shipping ecosystem.
Exactly. Fuel costs rise, inflation concerns reemerge, and uncertainty around trade routes begins to influence freight markets.
And we saw a bit of that reflected in the Baltic Dry Index, which edged higher again this week, supported largely by stronger Capesize activity.
Now, while stronger freight markets can sometimes delay recycling decisions, the broader geopolitical tension introduces another layer of risk for ship owners.
Especially when vessels themselves are operating in increasingly sensitive regions. There have already been warnings and incidents involving commercial ships transiting through parts of the Middle East.
And historically, whenever uncertainty increases in global shipping, older vessels tend to find their way toward the recycling market sooner rather than later.
Which brings us to the recycling sector this week, where despite all the geopolitical turbulence, we actually saw a surprising burst of activity.
Yes, and that activity was largely concentrated in Bangladesh, which emerged as the standout buyer this week.
After several relatively quiet weeks where bidding tables were looking fairly empty, Bangladeshi recyclers came back in force and secured a number of vessels.
The headline deals involved 3 LNG carriers from Malaysia's MISC, each weighing in at roughly 28,800 light displacement tons.
And these weren't small transactions either. Each vessel reportedly achieved prices north of USD 11 million on an as-is Malaysia basis.
LNG carriers don't typically appear in recycling markets in clusters like that, so seeing 3 units sold together definitely added a bit of excitement to the week.
Beyond the LNG tonnage, Bangladeshi buyers also picked up a couple of bulk carriers.
One of them, the Ocean Amazing, was concluded at around USD 300 per LDT, while the Wantong Summer reportedly fetched closer to USD 443 per LDT.
Those numbers highlight just how aggressive Bangladeshi recyclers were prepared to be in order to secure tonnage this week.
But despite the strong buying activity, the domestic picture in Bangladesh isn't entirely straightforward.
Not at all. The Bangladeshi taka weakened again this week, falling about 0.56% against the US dollar, ending near 122.7 taka.
And since vessels are purchased in dollars while scrap steel is sold locally in taka, currency weakness always squeezes recyclers' margins.
Steel plate prices didn't help much either. Local prices slipped slightly, dropping roughly USD 4 per ton to around USD 502 per ton.
So while recyclers were clearly eager to secure vessels, the underlying economics remain fairly tight.
There are also broader economic pressures beginning to show. Reports indicate fuel shortages in parts of Bangladesh, with rationing measures and long queues forming at gas stations.
That's another reminder of how quickly geopolitical disruptions can filter down to local economies and industrial sectors like ship recycling.
Now shifting over to India, the tone there was noticeably more cautious.
Yes, Indian recyclers were largely sitting back this week while Bangladesh dominated the buying activity.
Part of that hesitation comes from continued volatility in steel markets as well as ongoing currency fluctuations.
Indian buyers remain interested in tonnage, but they're being extremely selective about the levels at which they're willing to bid.
Which meant they simply couldn't compete with the aggressive pricing we saw coming out of Chattagram this week.
Moving west to Pakistan, the story there was also fairly quiet.
Pakistani recyclers continue to face structural challenges that have limited their ability to compete regionally.
Without strong improvements in domestic fundamentals or steel demand, buyers there remain cautious about committing to new vessels.
For now, Pakistan appears to be waiting on the sidelines while watching how pricing trends evolve across neighboring markets.
And then we come to Turkey, which has been through its own roller coaster over the past few months.
That's right. After a relatively active start to the year, the Turkish market has slowed significantly.
This week in particular was largely silent, with recyclers facing familiar headwinds including currency weakness and fluctuating steel prices.
As a result, appetite for new acquisitions remains limited for the moment.
When you step back and look at the broader picture, the ship recycling sector is once again navigating a complicated mix of global forces.
On one hand, geopolitical tensions are driving volatility in energy markets and creating uncertainty across global shipping routes.
On the other hand, those same pressures can eventually push older vessels toward recycling as operating costs rise and market risks increase.
Which is why, even during turbulent weeks like this one, we can still see bursts of activity in certain recycling destinations.
And this week, Bangladesh clearly sees that opportunity.
But as always in this industry, momentum can shift very quickly.
Currency movements, steel demand, and vessel supply all remain moving targets right now.
And if geopolitical tensions continue to escalate, we could see further volatility across oil prices, freight markets, and recycling activity.
For now, though, Bangladesh appears to hold the upper hand, while India, Pakistan, and Turkey remain in a more cautious posture.
That's all for this week's breakdown of the global ship recycling markets.
We'll be back next week with more insights into vessel sales, pricing trends, and the forces shaping the industry.
Until then, thanks for listening to the GMS Weekly podcast.
Stay safe and see you next week.